I will be right back with you. Be getting started in a minute. And I think we should be live on Facebook. Hi everybody, I'm Sami Abasad, Director of Education at T3 Live. Hope you're doing well, hope you're staying safe and healthy. We're going to go ahead and get started by taking a look at the market, and then we'll look at some swing ideas for next week. But before I do that, as always, a standard required disclaimer to let you know that trading is risky. Who doesn't know that already? And that whatever we discuss today is for educational purposes only. So make sure you agree to that. If you find benefit in today's video, I'd appreciate it if you hit the like button. That would help me out a lot. And if you're interested in learning about what I do and my services, links in the description. You can actually trade with me for the next 30 days for just 49 bucks. If you've never been a part of my either strategic swing trader if you're a newsletter, if you're a swing trader, or strategic day trader room if you're a day trader. But for now, we're going to go ahead and get started. This is our routine weekly video where I go over the market, give you an update, what to look for next week, and go over some swing ideas for next week as well. So we'll start off by going over the market. I use the Nasdaq and the SPY mostly for the market to assess the bias. IWM is good also if you're trying to get like a head start on a move, if you think there's going to be a move soon happening. So the IWM is good because it leads the market. The diamonds or the Dow Jones is not very representative of the economy because it's only got 30 companies in it. So I usually don't use it. And then we'll talk about USO as well. So let's start off by looking at the Qs. On Friday, that was yesterday, the Qs attempted to transition on the hourly chart to go up. This is hourly chart on the left, daily on the right. For swing trading, the daily is the main time frame. The hourly is for pinpointing entries. So I use both of these time frames for swing trading. But I just want to talk about the market for a minute. So the Qs tried, gapped up a little bit, and so did the SPY. And as you can see on the hourly chart, was trying to transition. So that's the transition that you want to see happen before you get bullish. I was going to say unfortunately, but not really. I don't care. I don't care about direction. I don't care if we're bullish, bearish, because to me it's just the same. Shorting, playing long is the same. It's just different directions. But we failed to transition and we sold off. I want to show you a 15-minute sell setup that we did in the room, and I did it mostly as a hedge because I entered in some long positions. Some already got to target, but I saw the Qs setting up, and if you're in the room with me, I did this. I did this as a hedge short on the Qs, 176.50 by 178.50 or so, if I recall correctly. Check it out, 176.49 by 178.53. $2 stop. I shorted 400 shares of the Qs as a hedge. I don't trade the Qs usually. As a hedge, it ended up being a home run play. Look at this. $6, $6.50. No, $6. Almost $6. I didn't mean for it to be such a good play on the Qs, but only as a hedge to my long positions in case the market dropped, which it did. I was like, wow, that's great. It worked out. This is a 15-minute sell setup, so that's what it was. And the market, of course, closed really bearish. So here's what you want to see on Friday, okay? On Monday, on Monday. If we gap up over the base, then that should signal short-term bottom. Without taking out this base, do not be looking for a bottom. I'm telling you from now, if we don't take this base out, don't be looking for a bottom. Check it out. This downtrend on the hourly chart, we've only had one attempt to transition higher, and that failed. But that's what I'm looking for, is an attempt, is a curling of that 20 MA, and starting a transition to the upside. So if we get that, then sure, let's be bullish. But otherwise, the bias should remain bearish. I try to pick bottoms and tops when it's clear. When it's not a profitable strategy to try and pick the bottom and the top. Trust me on this, it's not. I've been doing this for half of my life. It's only a good idea to do it when there's some acceleration, when there's multiple bars of the same color. So if it's a downtrend, you get multiple red bars in a row. Red, 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 and the bars are getting bigger and bigger. And maybe volume is also getting bigger. That's when you know maybe there's a bottom. Otherwise, don't try to pick the bottom. Most of the time you're going to be wrong. So that's one way to pick a bottom, is to look for acceleration. The other way is if you don't get the acceleration, that multiple bars down in a row or multiple bars up in a row, then you can look for the transition on the hourly chart. Okay, so on the daily here, we don't have multiple red bars in a row, so don't try to pick the bottom based on the daily. Okay, the only way would be if we transition on the hourly chart. So that's why the first thing I said when I came on the mic is look for, if we get a breakout or a gap above the base, then sure, we can be bullish. But barring a gap up or a move up that clears the base, it shouldn't be bullish. Okay, so check it out here on the 2018 drop. Let me show you 2008. I mean, I don't even have to go to 2018. This is June 2019. I was in Chicago teaching a mentorship class in person. Check it out. Down, 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 wide range bar, right? Big volume. Okay, that's probably a bottom. And from there, of course, we skyrocketed. So that's here's something that's easier. At the end of 2018, down how many bars in a row? You do the math. 7 in a row, 7 or 8, something like this, in a row. Look at how we accelerated. Accelerated means you start to move away from that trend. You start to accelerate below it. Does that make sense? So it's like a waterfall. And then look at the volume also increasing. With every bar, the volume went up and up and up until it was the highest, biggest volume bar, and that was probably the bottom, of course, right? Actually, it was the day before the bottom, but you see what I mean? So if you get that acceleration, then sure, you want to try to pick the bottom, great. If you get a transition on the hourly chart, you want to pick the bottom, go for it. But without that, don't try to pick the bottom, because you're going to be wrong 9 out of 10 times, 10 out of 10 times, almost. So I try not to. And so here, right now, yesterday on Friday, I thought the market might have a transition on the hourly chart. And so what happened is I got triggered into some long positions. Some worked out great already, like the DK. Check it out. This was an oil stock that I picked to play long. It was the only oil stock. This is why I picked it. This is why I chose this one for the newsletter. So check it out. It was the only stock on the hourly chart that was actually in an uptrend. You see the uptrend? Higher highs, higher lows, rising 20. I was surprised. Every other oil stock was below the moving averages in a downtrend. So I went with this one on Thursday, that is. And then on Friday, it paid. It delivered the goods. It went up 30%. And I think in the after hours it was up another 10, 15%. But it already got to the 20 MA on the daily, which was my target. I'm already out. So this was nice. So what I wanted to say is, even though USO is down, it is down and it's still bearish. It doesn't have a downtrend. It doesn't have a transition on the hourly chart, and it doesn't have multiple red bars in a row. So I taught you 2 ways to pick the bottom. Multiple bars in a row on the daily chart, or transition on the hourly chart. But even though we don't have that on USO, you can still find things that are oil stocks that are unique, that look better than USO, because USO is extended to the downside. Even if it just slows down, some stocks like the DK, for example, are going to explode. They might. So we can still look for longs. Doesn't mean you can't look for longs, but because the USO is very, very extended. But on the sector itself, on USO, on oil sector itself, don't try to pick the bottom on the ETF. Not yet, at least, right? The same with the Qs, the same with the SPY. The IWM is actually a little bit more bullish right here. Of course, IWM, I'm not oblivious to the fact that the IWM is way weaker than the Qs and the SPY put together. It leads the market. The IWM actually did not make a new high in 2019, 2020 compared to the 2018 high. So it was showing relative weakness to the Qs and the SPY, and it crashed. I mean, the IWM from the high to where it's closed at, it's down over 70%. It's down 70%. And that's not from the all-time high. That I'm talking just from the 2019, 2020 high. It's down 70%. Is it down 70%? It's down $70, so that's not quite 70%, but it's down a lot more than the Qs and the SPY. The Qs and the SPY are down about 30, right? The SPY is much weaker than the Qs also, because the SPY is dominated by banks, which have been really weak, and much more by oil, which, as you know, is down like 70% itself, or more. So the SPY is really, really weak. There's no doubt in my mind that there is not going to be a quick reversal and like a fixing of the situation anytime soon. There's no doubt in my mind that we're not going to be, because we have a downturn. We don't have multiple bars, like just a big fall. So we have a downtrend going on. The uptrend is over on every time frame, daily, weekly, monthly. So even if we do get a bounce, it's only going to be short-lived. I mean, Qs would be just to 200 probably, if we do get a bounce at all. So it's going to be short-lived. This is probably, unfortunately, this is going to lead to a recession. Most likely. I mean, there's going to be millions of jobs lost probably, unless the coronavirus situation is fixed in like no time at all, in a couple of weeks. But that's not going to happen. I doubt it. The good thing, guys and gals, about being a trader and more than an investor, the good thing is you're liquid. You're in and out quickly. The market, you can be all out bearish and the market does something incredible. Let's say tomorrow everything is gone and the market gaps up 10% and clears all that base that the base that we talked about. You can change your bias. You don't have to be married to the bias. You can change. That's the beauty about it. What I like, the only thing I like about having a bearish market and a recession perhaps and all of that bad stuff, I don't wish that on the economy, on other people, on myself, right? I live in what's considered a luxury, high-rise building, so that's obviously that's gonna hurt real bad if we get a recession. In 2008, it lost 50% in value. Just telling you, almost 50%. But what's good about having a downtrend and a recession is, this is the good thing about it, is the volatility is really, really high. So as a day trader, as a swing trader, it doesn't get any better. When the volatility is high, when things move so much, you're going to make a lot of money. So that's the only thing that I like about it. But do I want a recession? Do I want my place to lose 50% of its value? No, I don't. Obviously, I don't. But do I want people to lose their jobs? My partner, she might lose her job. I'm telling you, it could happen. So no, I don't want any of that. But with fear and with the downtrend, you get a lot of volatility. Every day we get a 4 or 5% move in the market, sometimes 10%, sometimes 7-8% routine. On the way up, what kind of moves did we get? 0.5% in the market, 1% if it was a big bar. I mean, you look at the size of the bars here. Just take a look. The difference between the downtrend and the uptrend. Just take a look. Look at the size of these bars on the way up. Look at the size of these bars, and look at the size of these bars on the way down. They're about 5 times the size, at least 5 times, maybe 10 times sometimes. I mean, just look at this. The average bar is like a dot on the way up, and this is a bad tick. This never really happened. The biggest bar we see on the way up, biggest bar, look at this, going back months, almost 6 months or more, biggest red bar is right here, and that is a blip compared to the bars we're getting right now. So I love volatility, and I can't lie. All right, I love volatility. You should too if you're a trader. Now, is it good for people with 401ks? No, it's not. But what can we say? What can we do? We play the card that we're dealt. We play the hand that we're dealt. And right now, it's a really bearish, beautiful bearish downtrend, and I'm enjoying it. You've seen some of the videos recently, about my performance. So, okay, I think since just March 9th, I'm up $250,000. But again, knock on wood, I'm not trying to jinx anything. Okay, I talked too much. Let's move on to look at the swing ideas for next week. I don't have a lot of bearish ideas. I did my routine scanning last night. And I already, so this is all I got. ABMD is good, it's great because it's not extended. You see, it's right by that 20 MA. But the problem with it is it's triggered already. So I'm kind of late here. Missed out on it by a tiny bit. It's not too late. The trigger should have been under 130.13. It's already at 130.50, so I'm about $1.50, $1.60 late. But it looks good. Stop above the base. Target is about $100, or even 75. I know what you're thinking. That I must be crazy to be looking for a move to the 200. I'm not. I'm telling you. I mean, it was a $450 stock. Look at this, 450, 459. Just at the end of 2018. It's at 130 today. Who's to say it's not going to get down to 100 or to 75? I think it will. ABMD. When they go climactic like this and they top out, sometimes they go climactic and then they base and they continue higher. But when they go climactic and then they collapse, there's no going back. I mean, 99% of the time, they're not going to go back up. They're just going to really keep going to reach that area from which the rally started, from which the entire move started. So we're talking $50 here on ABMD. Abiomed is his name. I'm thinking, let's be conservative and look for target 1 around $100, target 2 the 200 MA, which is that red line on the chart on ABMD. I like it because it's not extended. It's close to the 20 MA. The GLNG is a sell setup, much more extended. See, the distance between the 20 MA and price is much bigger, much farther away from the 20. So short stop. The shorts are tough. The ABMD is better than the GLNG. KHC is also not extended, but it's not going to be as big of a move as the ABMD. Short and stop is either right here or over the entire base. Over the entire base would be a lot safer, but much bigger as a stop. But nice hourly chart. The bigger the base. This is what I said about the Qs on Friday when I did the Qs. Because people were I have new room members every day, and they were asking me, what makes you bearish on it. Of course, I went over the setup for like 30 minutes before it finally went here, before it finally triggered. But this is a rule that you should keep in mind. When the resistance above is greater than the support below, the odds of a move lower to the downside are very, very high. So again, look at the top that we created, big rounding top, and look at the support. Where's the support? It's the pivot low. That's the support. There's no other support all the way down to here. So I went over this and I said if the resistance above is greater than the support below, odds of a move lower are very, very high. And so that was the setup, short, stop, and I took it as a hedge. I didn't mean to make, I don't know how much it made, but I didn't mean for it to be a great trade. I just thought if the market collapses and I have some long positions, I want to protect myself. The good thing is the long positions were not even affected by the equities market, affected by oil. And DK didn't care about the market. It actually went higher initially. I have also TVT. That's not oil, but it did well. It's up like $1,000 or so. I got it at 330, 331 maybe. I don't remember exactly. So long. You see, notice what I look for is a transition on the hourly chart or acceleration on the daily, one or the other. So that's a transition on the hourly chart. So at any rate, let's continue with the list. So I like ABMD, GLNG not as much. KHC I like also. TTWO is a fresh, brand new breakdown. Problem with it is I like tight patterns. This is not a very tight pattern, because with a tight pattern you can place your entry under the base with a stop just above it. So this is a $10 stop right here, entry right here, and this is a long-term trade because the monthly chart is starting to break. Look at the size of the top above here on the monthly chart. So for sure this is headed towards the prior pivot low. When I say for sure, just FYI, it's not for sure. There's nothing for sure, nothing 100% when it comes to trading, but it's just a way to express my confidence or my how I feel about a place. Sometimes I say, oh, for sure this is lower, for sure this is higher, but if the market proves me wrong, I will change right away. I'll change my bias. But this looks like a long-term play. YY is a breakdown on the daily chart, tighter base but more extended, far from the 20 MA. But you could try it under the base, stop above it. Looks like it's headed towards the prior low here on the monthly chart at $31 or so on YY. TVTY, I sure hope it's not a short. I'm in it long. Okay, longs, we have a much bigger, much better list than the shorts. Unfortunately, the market is not bullish, but the longs look much better. Chef as a base breakout and a transition on the hourly chart. You're going to see a lot of these transitions, hourly transitions. So Chef would be a long over the base, stop just under this low. So it'd be over here, stop right here. And if it were to move up to $10, it'd be a huge play already. Imagine if it were to move up to 20, to the 20 MA. It'd be a phenomenal play. But I'm just looking for like $10. Would be great. On Chef, CHNG is a transition on the hourly chart, kind of triggered already. And notice the 20 on the hourly is a bit. I can go to white. Let's just go to white here to make it clearer, maybe to see. So notice the flattish 20. I like them to be rounding. I like the 20 to be rounding, not flat like this. So that's the only reason why I'm not going to play it, but it looks good. Long stop on the CHNG. CLB is also a transition plus a breakout. So entry would be over the base, stop below it. If you're in the strategic swing trader as a member, feel free to log on to your account right now. You'll see which ones I picked for us for Monday. Okay, which ones I'm going to be playing. The CVE oil, it would be a transition right here. Long stop. Okay, I took 2 or 3 oil stocks on Friday long, but with a quarter lot size, a quarter risk. So even though I did take a bunch of oil stocks, 3, I believe 3, maybe not, maybe 2. Hold on just a second, I'll tell you. I took 2 and 2 oil and 2 non-oil, but the oil stocks were with smaller size. So with quarter risk only. So CVE would be oil. EAT is an hourly buy setup. So actually, I wouldn't do it over the base here because that would be too big of a stop. I would just do it right here long, stop right here as an hourly buy setup on a stock that's actually climactic on the daily. MDC, same patterns. They're all the same patterns almost. Transition on the hourly. So entry over the base, stop below it. NBL is a oil long over the base, stop below it. OIS looks better over the base, stop below it. Same thing. OSW over the base, stop below it. You get the point. Silica or SLCA is actually better than the last few that I showed you because this is a really tight base. If it were to pop, it would be a big play. Even if it were to just pop to 150, that would be at least 2-to-1 reward to risk. SVC, climactic daily, beautiful buy setup on the SVC, better than EAT, SVC. Okay, that's a better chart. Tilray of all plays, I don't think that Tilray is gonna work. It's certainly not one of the 3 that I picked for Monday to play, but it's just to watch as a buy setup. Tilray went climactic already, believe it or not, on the intraday charts. So usually when they go unbelievable, like put in an unbelievable move like this from 240 to 530, that's over 100% in just 2 days. They don't go back up. That's too novice. But anyways, you can watch it for a buy setup. So EAT, SVC, and Tilray are all hourly buy setups. TMHC, I think I didn't I go over this already? TMHC, no, I didn't. Over the base, stop under it, same thing. TPH, I'm sure it's going to be the same. Over the base, stop under it. Some of these are real estate stocks, some of them are oil, some of them are healthcare, some of them are food, like Eat, a restaurant, I think, or they own a bunch of restaurants probably. TRGP is oil, but looks better because it's already above the moving average. This looks stronger than the rest of them. Over the base, stop below it. And then last but not least is WBT, same thing, over the base, stop below it. Kind of like the TRGP, and it is not one of the three that I picked. So, and I picked 2 longs, 1 short, by the way, just FYI. But at any rate, if you're a subscriber to my newsletter, feel free to log on to your account and you'll see which ones I picked for us for Monday. Or if you'd rather wait for the newsletter, then it'll be in your inbox by about 8 o'clock on Monday morning. With that said, my friends, I hope you enjoyed today's video. I know we talked a lot, but there's a lot to talk about. I mean, the market is interesting. Some plays are interesting. We have a lot of different sectors that are moving a lot more than the market, like oil, real estate, all these mortgage companies, right? So I hope you enjoyed today's video. Again, if you'd like to trade with me, if you'd like to get my own plays, feel free to check out the links in the description below. Whether you're a day trader or a swing trader, I have a swing trading service that's completely separate from the day trading service, and I have also a day trading chat room and coaching that's completely separate. So whatever your style is, you know, I have a service for you. So feel free again to check out the links in the description. If you have any questions, reach out to me, sammy@t3live.com, or send out an email to customer service info@t3live.com. Okay? All right, everybody, stay safe, healthy, and happy, and I will see you next week, I guess. I'll talk to you. If you're a subscriber, I'll see you on Monday at 9 a.m. on the VTF, Virtual Trading Floor. Thanks so much. Have a good rest of the weekend. Take care, everybody. Ciao.